Good morning and welcome to our second webinar focused on IHT planning. For those of you who missed the first webinar, it is available to watch now on our website. In today's webinar, we will continue to explore the theme of business relief investing as a way of mitigating inheritance tax. But today we will look at the main alternative to AIM investing into unquoted businesses. As a reminder, investing into assets which qualify for business relief can provide up to 100% relief from inheritance tax after holding the shares for at least 2 years and at the date of death. There are two main ways of investing into business relief: via the holding of certain AIM shares. These are smaller companies listed on the alternative investment market, and investing directly into unquoted trading businesses. With regards to unquoted trading businesses, there are many specialist managers available who focus on running funds which are specifically set up for this type of investment. Their target is generally to provide access to opportunities which can obtain the relief whilst taking the lowest possible risk. We have undertaken an extensive due diligence exercise over the last few months to identify and partner with those managers who we believe have the experience and expertise to run these funds successfully. And I'm pleased to invite Michael Reilly from Foresight to the webinar today, who are one of a number of specialist firms we have partnered with in this area. I will now hand over to Michael to talk more about their IHT fund. Thank you very much for joining us today, Michael.
Brilliant, thank you, Will. Appreciate that. What I'm going to do today, what I've been asked to do, is provide an overview of the unquoted business relief strategy, one of the chosen providers for Credo Capital. But before I do that, what I wanted to do is just work through this slide. I think it's really, really important that we talk about the fact that this product is investing in unquoted companies. Unquoted companies inherently carry liquidity risk, and as a result, what this slide is telling you is that we only accept applications into these products from those who've sought financial advice. And that's why Will's invited me on today, and that's why it's really important that if this is something that's of interest to you or your family, that you speak to Will or another member of the Credo team who'll be able to offer support ahead of choosing to invest. But yeah, really important to just read the risks on this slide. I'll leave it up for a couple of seconds longer, just in relation to the risk of these products. So, quick introduction for me. Hopefully, you'll have seen some of this in the registration email that was sent round. So, my name is Michael. I am the Senior Business Development Manager for Foresight Group, and I'm responsible for the London region. As you can see there, I joined Foresight nearly 5 years ago now, and I'm responsible for the distribution of all of our tax incentivized products, which includes the IHT fund that we're going to talk about today, as well as some of our capital market strategies. Before joining Foresight, I was at another business called Octopus Investments. You may be familiar with their energy arm, Octopus Energy, and I was there for about 4 years as well. What I thought would be really useful to do, however, is just kick off with who are Foresight Group, who are we. Hopefully, some of you on the line will have heard of us, but I suspect many of you haven't. That's semi-intentional, really. So as you can see there, we run about £12.5 billion worth of assets. We run those assets globally. You can see a couple of the countries listed, on the screen in front of you there. Most of that money that we manage is invested in infrastructure projects. So about 11 billion of that 12.5 is invested in infrastructure projects, predominantly renewable energy infrastructure. So I'm talking about things like wind, solar energy sites, but also other forms of infrastructure as well, such as forestry. That's going to be really, really relevant today to our conversation, because when I get to show you the product that I'm talking about, the inheritance tax fund, you'll see that a lot of the allocation of that product is invested in infrastructure as well. So that is our background, that is our pedigree, and we've been doing that since the early 2000s. Now, the reason why you probably haven't heard of us is because most of the money that we manage is on behalf of large institutional clients. And you can see a few of these names on the screen in front of you now. In fact, we've got over 200 of these institutional investors that have partnered up with Foresight Group. These are very, very difficult mandates to win, and so we're quite proud to have won over 200 of these. These investors get no tax breaks, none of the tax breaks that we're going to talk about today, particularly in the inheritance tax side of what we do. They just invest in the assets that we manage because they deem them as good quality investments. One of the really important things for our investors is that the investment managers that work across the institutional funds also work on the retail products, including the inheritance tax strategy. To them, it's almost irrelevant where the money comes from, whether it comes from the British Airways pension fund, from BlackRock, or from our retail clients in the inheritance tax strategy. Our investment managers manage the money and the assets in exactly the same way. So everything today that we're going to talk about is about investing in unquoted and unlisted companies, which inherently carries a bit of a risk to it. However, one of the things that you should be aware of is Foresight ourselves, we are actually listed. And you can see there that we listed in the height of lockdown, February 2021, and we've listed on the London Stock Exchange. That in itself means that there's quite a lot of visibility about what we're doing as a business. We have to regularly publish our accounts to the markets. We have a lot of institutional investors that have backed us. And if you want to go and do some additional reading about us as a business, then I'd recommend starting at the London Stock Exchange website, where you can read much, much more about Foresight Group generally. One of the things that we're massively proud of, though, is that whenever we listed, we qualified for and were awarded the London Stock Exchange Green Economy Mark. And as it says on the screen in front of you, that recognises listed businesses and funds that derive more than 50% of their revenues from environmental solutions. As it rightly says there, only 5% of all businesses listed on the London Stock Exchange have qualified for this, and we're the second financial services business ever to be awarded that Green Economy Mark. So we're really proud of that. When I get to show you the portfolio of where we're investing, the inheritance tax fund money, you'll see why. But as I say, something that we're really proud of. And if investing sort of sustainably, ethically, is important to you or your family, then it's definitely something that we should be able to help with moving forward. Okay, so I know Will have touched on it already, but what I want to do is just briefly give you an overview of how business relief legislation works and how we are achieving it on behalf of our investors. And this is a fairly simple slide, but hopefully gives us a good idea of what's going on. So business relief is a piece of legislation that was introduced by the government in 1976. And effectively, what it is designed to do is avoid the breaking up of UK businesses to pay what was at the time death duties. In terms of how damaging that could be to the economy, clearly, if every time a business owner passes away, a company had to be sold, then over time, the number of companies that are operating in the UK would diminish. And from a UK PLC perspective, that is quite damaging because those companies no longer pay tax, they no longer employ people, those individuals no longer pay tax. So you can see why the relief was introduced. Effectively, what the relief is if you own shares in a qualifying company for 2 years and at the date of death, then the value of that shareholding is taxable at zero from an inheritance tax point of view. So quite a number of businesses in the UK qualify for this relief. Some businesses that are listed on AIM, and I'm sure Will have covered that with you before, if not in due course, as that's something that you can also access through Credo. As well as that, most unlisted businesses in the UK also qualify. If you are a business owner yourself, it's very likely that the business that you own may qualify for business relief. There are some explicit exclusions, particularly around sort of property development and things like that. Any business that's too cash rich as well will not qualify. But other than that, most businesses will qualify for business relief. As I say, the legislation was introduced in 1976 and has essentially been broadened ever since by every colour of government that we've had subsequently. The way we achieve business relief for our investors is we have essentially set up a separate unquoted trading business. And through investment in the Foresight Inheritance Tax Fund, clients buy shares in that company. And should they hold those shares for 2 years and at the date of death, then the value of that shareholding should be taxable at zero. There's a couple of exemptions. The most relevant one is the spousal transfer upon death. And in really simple terms, all that means is that 2-year minimum hold clock is transferable between spouses and civil partners. So in a circumstance where one individual buys the shares, let's say they survive for a year and were sadly to pass away, their surviving spouse would only need to survive the balance 1 year in order to achieve business relief. And this is a useful slide in terms of describing what business relief can offer in conjunction with more traditional forms of inheritance tax planning, particularly insurance, gifting, or placing money in trust. And that is because business relief is an investment. It is an investment in the investor's own name, and therefore they have the ability to control that investment. It's theirs, they haven't given it away. And should they need access to that money, they can draw down from their investment and look to bring that money back into their estate. The speed argument is hopefully pretty self-explanatory, and that is that this is a 2-year option. We'll maybe get on to talk actually later on about an opportunity that even speeds that up. But this is typically a 2-year solution in order to help mitigate IHT very quickly. I suppose that describes the efficiency element as well. And in addition, you've got within the product set itself, the ability to access investments in quite a different element of the UK economy. And hopefully on a broader spectrum, that will give you quite useful diversification in terms of the asset classes that you're invested into. A lot of these funds, ours included, have been around for well over 10 years now. So these are now very well established businesses. This is an industry that raises well over £1 billion annually. So, there's lots of investors that have trodden this path before, and hopefully that should give you confidence to utilize that for you or your family moving forward. So that was a whistle-stop tour through sort of what is business relief and how it's achieved. And now I'm going to specifically show you the product in question. So we have 2 solutions that I'm going to talk about today. We have the Foresight Inheritance Tax Solution and the Foresight Accelerated Inheritance Tax Solution. But both of those products invest in exactly the same unquoted trading company, and that company is called Avron Park. You'll remember a couple of slides ago I described that the way we achieve business relief for our investors is we've created a separate limited company, and all of the investors through our funds become a shareholder in that business. And this is that business in front of you. That business is called Avron Park Limited. Again, if you want to go and look up that business, you can. If you do a quick Google, you'll be able to find that this business has its own website, or you can have a look at Companies House, where you'll be able to read much more about the business and have a review of the accounts that are published there if you're so inclined. So this is a massive business. This is the biggest fund that we manage at Foresight Group, and you can see there a current net asset value of around 1.2 billion. So it's a big company. Within that business, we essentially buy and operate physical infrastructure assets. So you can see here through the multitude of colors on your screen that we're investing in a variety of sectors within the Avron Park wrapper. I like to break it down. We invest in 3 big blocks of asset class. The first is renewable infrastructure, which you can see there, wind, solar, reserve power. Then we have core infrastructure, which is things like forestry, fiber, biomethane refueling. And then our final block at about 18% is some secured lending. And so we package this product together. We think we get a nice natural blend of different asset classes. And you can see why earlier on I was referencing our experience in investing in the infrastructure space, particularly for those large institutional clients. Because as you can see, we've effectively replicated that with this product here. So quite simply, you own shares in Avron Park after investing through the Foresight Inheritance Tax Fund. And after the 2-year anniversary, if the shareholder was subsequently to pass away, the whole value of that fund would be taxable at zero from an IHT point of view. What I thought would be useful is just have a chat through a couple of the assets that we're allocating to. And hopefully I've picked out a few examples of some of the more unique assets that we've got within the portfolio. The first is forestry. Now, this is an asset class that we're really excited by, particularly given the environmental commitments that a lot of governments have made around the world, and a lot of corporates in terms of reducing their carbon output and looking to achieve net zero by whichever specified objective that company or government is committed to, typically 2050. So essentially what we're doing is two things within the forestry space. We are buying forests in their current form at the minute, but more excitingly, we are buying land and planting new forests, and that's called afforestation. So we're planting on pretty redundant, old, barren sheep farming land typically, and we are planting new trees in order to grow some forests. Again, what's really exciting about that as an opportunity, and where some of the returns may come through the planting of these trees, is through the creation of offsetting carbon credits, which will need to be purchased by a lot of corporates and governments in order to maintain and meet their net zero objectives. And so by planting new forests, creating new carbon credits, we're able to essentially generate those and sell them on. Additionally, the timber industry is looking to grow. We estimate sort of 4 times by 2050 as the world looks for more sustainable building materials and a move away from sort of steel and concrete. So as you know, it's about 10% of the fund, our allocation to forestry. It's all UK based, so typically North Wales, the north of England, and a lot in Scotland, unsurprisingly. But a nice, interesting, diversified asset class that you can get exposure to through the Foresight Inheritance Tax Fund. So it's all well and good. I'm sure you're all thinking, well, I've been talking through the product, but what is the performance? What should I expect to receive in terms of return if I invest in this strategy? And so the target objective of this fund is we aim to return to clients net of all fees between 3 and 4.5% on an annual basis. You can see here returns benchmarked for a real investor who invested in September 2013. And you can see the returns that they've achieved up until the last audited valuation in March 2023. Now, there's some sort of peaks and troughs throughout that period of time, but actually on an annualized basis, this client has received around 4.8% per year on an annualized return basis. So relatively steady. What we're hopefully delivering by investing in this diversified portfolio of infrastructure assets is a returns profile that's really quite predictable. We have visibility on long-term revenue, and what's pretty pertinent at the moment, we have a nice inflationary protection on the assets that we're investing into, which I know is clearly quite a hot topic at present. If that's of interest and you'd like to understand more about that inflation protection, drop Will a note at the end of our webinar, and we can have a chat maybe in more detail if that is of interest. In addition, I wanted to talk through how we manage liquidity in the product, because clearly that's really key. I talked earlier about one of the big advantages of business relief being the ability to have access to your capital if you needed it back. And so the way we manage liquidity, and this is the way that all unquoted business relief managers manage liquidity, is essentially through 3 layers. The first layer is through matching incoming shareholders with outgoing shareholders. So whenever clients pass away and their beneficiaries decide to exit the strategy, then they look to leave and they look to sell their shares to incoming investors. And in almost every circumstance, that is how liquidity is provided for exiting shareholders. And that is because we are raising typically 4 times as much money on a weekly basis that we have leaving the fund. Now, in certain circumstances where potentially we don't have enough money coming through the door, it's very rare, it's only happened 2 weeks in the last 11 years, then we do run about 8 to 10% of the fund in cash. So if we needed to dip into that for liquidity, then we could. And the final layer to our liquidity is that almost all of the assets that we're investing in via Avron Park through the Foresight Inheritance Tax Solution are yielding. So they're providing either a quarterly, an annual yield into the company, which allows us to replenish our cash stocks, and we can use that to provide liquidity if we ever need to. To provide some level of comfort, that first level has been used exclusively since we've launched the product, apart from, as I mentioned a moment ago, 2 weeks over the last 11 years where we had to use our cash buffer. Now, what we should do here, though, is be very, very clear and open about what would happen if there was a run on the fund. What would happen if everybody tried to leave at the same time? That is a risk. That is a risk that could happen if the legislation were to change. Thankfully, I don't believe that's going to happen, and it hasn't happened since it was introduced in 1976. But we should be very clear that we've planned for that circumstance. In that scenario, we would need to gate the fund and sell the underlying assets. Now, as investors in those assets on behalf of large institutions, we know there's a ready-made secondary market for those assets. So we've run some analysis, and we believe that we would be able to liquidate half the portfolio in about 6 months, with the balance in the following 6. We believe we'd be able to sell the portfolio at the value that it's currently held at, and that's one of the key attributes to the way that we value our fund on a quarterly basis. Is what do we believe the true breakup price of this fund is today? Let's hope we never fall into that circumstance, but at least you know that we've planned for that scenario just in case. I've got there at the bottom of the screen a couple of statistics around liquidity. So we aim to provide liquidity within 30 days of request. The average actually at the moment is about 15 days, and that 30 days is our ceiling. We've never missed that. We're pleased to report. And there's no cost to you in terms of fees to exiting this strategy. We don't penalize you for taking money out of this product should you need it. Now, you might remember a few moments ago, I talked about the fact that we have 2 products. Both investing into Avron Park, but we have both the Foresight Inheritance Tax Solution, which I've just talked about, and the Foresight Accelerated Inheritance Tax Solution. Now, I'm really excited about this product and was really excited when I was first told about this, because I think this solves a real problem within the IHT planning space. And effectively, what the Accelerated Inheritance Tax Solution is an investment in Avron Park coupled with 2 years worth of life insurance. And therefore, what that means is if an investor takes out the accelerated product and they were to pass away within the first 2 years, then the business relief element of the investment would fail because they haven't survived the 2-year minimum hold period. But what would be useful, therefore, at that point is the insurance. And that insurance would therefore end up paying out 40% of what they put into the product, essentially covering the IHT liability, given that IHT is 40% of the value of something. So really, really excited to offer this product. The most exciting thing about this, in my opinion, is the fact that there is no underwriting that needs to be undertaken by investors. There's no suitability questionnaire, there's no GP reports, there's no medicals that need to be undertaken. All a client needs to satisfy in order to be able to qualify for the life insurance is they have to meet 3 criteria. Those criteria are fairly simple. A client must be aged between 62 and the day before their 90th birthday whenever they invest in the product. They have to be able to sign the paperwork themselves. So in most circumstances, that should be fine. But if a client has sadly lost capacity, unfortunately, they wouldn't be able to qualify for the insurance. The third and final criteria a client has to meet is they have to be able to self-declare they haven't been diagnosed with a terminal illness. Now, our insurer's definition of terminal is where you've been given a life expectancy of 12 months or less. If you can conform to those three criteria, then you can utilize the Foresight Accelerated Inheritance Tax solution, effectively allowing you to mitigate IHT in some circumstances from the day you invest. So just to finish off, what I have here is a real life example of a client who's benefited from the inheritance tax solution. So one of the consequences of an aging population and people living longer and longer is that more of us are likely to develop conditions such as dementia. As sad as that may be, one of the things that we can do to protect ourselves in that circumstance is ensure that we have set up powers of attorney, so that if the worst were to happen, we have appointed individuals who can act on our behalf if we do lose capacity at some point. If you haven't done so already, it might actually be worth chatting to Will or another member of Credo about ensuring that you've done that. One of the challenges, however, particularly when it comes to inheritance tax planning, is once an individual has lost capacity and a power of attorney is in place, doing effective IHT planning becomes nigh on impossible, or so it may seem. And that is because an attorney must not deprive the donor of capital or change their standard of living. So in normal English, they can't give the money away. And you can kind of see why that rule is in place, because we don't want people, once somebody's lost capacity, to sort of strip money from them. But clearly, when it comes to mitigating inheritance tax, that creates quite a big problem. And we see this quite often. And unfortunately, in that circumstance, if a client were to have £500,000, and assuming all of their allowances have been used up elsewhere, if they were to pass away, unfortunately, 40% of that, so £200,000, would be paid to HMRC in inheritance tax. That would leave the beneficiaries with just £300,000. However, what the family of the client could do is, through the power of attorney, make a £500,000 contribution to a product like the Foresight Inheritance Tax Fund. Now, assuming that that individual survives for 2 years and holds the assets when they pass away, then the whole £500,000 would be taxable at zero from an inheritance tax point of view. And that would mean that in that circumstance, the full £500,000 would be available to beneficiaries. Clearly, quite a huge difference in terms of what's being passed down to the next generation. You might be thinking, well, how does that work? And that goes really back to that point I was making around access and control. Because this is just an investment in the donor's own name, you haven't fallen foul of that deprivation of wealth restriction that is in place. And therefore, you are able to make this type of investment via power of attorney. In actual fact, about 1 in 4 of our cases come via this route. So if you are engaging with a family member who has potentially sadly lost capacity, and you think potentially that IHT planning isn't possible, then this could be a route for you to speak to Will or somebody else at Credo in order to have a conversation and explore this as an alternative. So that's all from me. Thank you for your time. Hopefully that was a useful run through over our solution, over business relief, and particularly the accelerated business relief option, which in some circumstances can mitigate an inheritance tax liability from day one. I'm going to hand back over to Will now, just to finish off the webinar, but thank you for your time.
Thank you very much for that very informative introduction to the IHT Fund, Michael, and I hope you all found this webinar insightful. As a reminder, IHT planning needs to be looked at holistically and strategically, and these types of solutions, whilst very tax effective, need to be considered in the round based on your specific objectives and circumstances, and they may form a part, small or large, of your overall IHT plan. If you have any queries in relation to your own IHT positional planning, please do not hesitate to get in contact with me or your relationship manager. Thank you again for watching.